Trading ranges are a little bit narrower. I have to say that. A couple of months ago, this would have been a wide trading range, Tom, but it's narrow relative to what we've seen over the last couple of weeks. Your lows down 0.6%, your highs up 0.9%, and in the here and now, right now, Tom Keene, equity futures down 7 points. We're off by a third of 1%.
Yeah, yesterday's close was really something. I mean, I think that really caught a lot of people by surprise. I certainly don't want to get out front of what we're going to see on a Tuesday and a quarter, but I would look away from the equity markets and, again, oil and bonds. I mean, I'm sorry, John, bonds speak. Those yields are shocking as you open the show with.
Yields coming in 4 basis points today. We're down a whole lot more than that on the year so far. We'll talk about that and credit a little bit later in the program. We'll get Lisa's views on the amount of issuance that we've had over the last couple of weeks. Right now, we're down 4 basis points on a 10-year Treasury to 0.68%. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
We need to tackle coronavirus together. You can help by not traveling unless it is absolutely essential. With limited staff, TfL is supporting journeys for critical workers only, especially the NHS and emergency services. No one else should be travelling. If you must travel, try to avoid the busy times, particularly the early morning. We have already seen fewer people using our services. Thank you for doing your bit. Stay at home. Do not travel. Save lives.
This week at Tesco, large Easter eggs are 3 for £8. And we've got a large choice too on all your favourite brands, including Terry's Chocolate Orange, Cadbury's and Maltesers. At 3 for £8, why shell out more? Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply until 13th of April.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
An
I'm Karen Moscow. U.S. stock index futures are fluctuating, while European stocks are headed for a fifth increase in 6 sessions amid debate over whether the market meltdown has ended, given the continued spread of the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 5 points, Dow futures down 15, NASDAQ futures up 10. The DAX in Germany's up 0.5%. 10-year Treasury up 13.30 seconds, yield 0.68%. The yield on the 2-year 0.22%. NYMEX crude oil up 7.25%, up $1.45 to $21.54 a barrel. COMEX gold is down 1.9%, or $31.20 at $16.12 an ounce. The euro 1.0939 against the dollar. British pound 1.2346, and the yen at 108.60. Oil producers ExxonMobil and Occidental Petroleum among those jumping in the pre-market as crude rebounds after a 3-day slump. Exxon's up 2.7% this morning. Occidental up 5.7%. Marathon Oil up 7.4%. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. The latest news out of Washington, D.C. Before a $2 trillion fiscal package even takes effect, before the SMEs get their loan and you get checks in the mail, we are already talking about another round of aid, Tom. According to people familiar with the matter, White House officials compiling lists of requests from government agencies totaling roughly $600 billion.
When the facts change, I change. And, John, they changed about 12 noon yesterday. I don't know the exact time at Bloomberg, but Macy's came out and had this strange new word, furloughed. We were furloughed. And it was extraordinary, folks. I sat with a New York Times article this morning and just added up the tens of thousands of jobs gone from 6, 7, 8 retailers. And, John, I came out in the vicinity of 400,000. Kevin Cirilli is our chief Washington correspondent. Kevin, it's happening in real time. It's hard for Washington to react in real time as well. We're going to have a double-digit plus unemployment rate. What's next?
More stimulus. And in fact, I mean, you know, I haven't started my daily round of calls because I'm trying to let people sleep just a little longer as they wake up to this new reality. But yesterday, the big takeaway from all of my conversations with people on both sides of the aisle was that they want to see how this week goes in disseminating all of the last round of the economic stimulus. And, you know, yesterday, former Vice President Joe Biden's team held a conference call, Tom, with all of the congressional chiefs of staff of members who have endorsed Biden. And one of the things that Biden's going to be pushing for is a student debt forgiveness as well of up to $10,000, as well as increasing Social Security benefits. And in addition, he's going to try to make this contrast on oversight of the first round of stimulus. That he's going to, you know, argue that he's going to see whether or not there's any corruption in how this money's being handed out.
All right, so let's go into some of the details. So the bill that was passed last week provided direct payments of $1,200 for each adult, $500 for each child, and it got phased out for individuals making more than $75,000 a year, couples making more than $150,000 a year. The new bill that's being drafted with Nancy Pelosi, House Speaker, taking the charge. It's attempting to increase food stamp benefits, expand family leave, include pension guarantees, infrastructure projects. The nearest date that we might get some sort of coherent plan with some sort of agreement is April 20th. How realistic is it that this gets passed in short order, frankly, to provide the need that Tom was talking about to all those hundreds of thousands of furloughed employees?
You know, I got to be frank here. I think that this round of stimulus could be much more of a significant political fight than even the last one.
Okay, but this is important. John Farrell, this seems foreign to you, doesn't it? Isn't it done differently in the United Kingdom?
Well, that's because you don't need a bipartisan approach in the United Kingdom right now, because the Conservative Party has a majority. The apparatus and the system of procedure you need to go through down in Washington is just different, Kevin. You need to get on with a lot of different constituencies to get things done. And I'm thinking of the president right now trying to get on with a series of governors, not just from the Republican Party, but from the Democratic Party as well. How important are those relationships going to be in the coming months?
Huge. I mean, and I was speaking to a source yesterday who told me just how crucial Chairman Richard Neal is going to be the Democrat from Massachusetts, and that's someone that Speaker Pelosi has really, really enjoyed working with. I was told yesterday he's the chairman of the Ways and Means Committee, and really is becoming the go-to person for Speaker Pelosi in terms of navigating all of the different budget requests, for lack of a better word, for the economic stimulus. So you've got Chairman Neal on one side, and then here's a name that I don't think people in our audience should be familiar with, Javita Carranza, who's the head of the Small Business Administration. Did you notice that she wasn't at the signing of the economic stimulus bill, Tom? She wasn't even there. SBA, which got $250 billion worth, and she's not even there.
Okay.
They're trying to protect her from being a polarizing political face in this because they want to keep her as an apolitical type throughout this. That's the strategy for why you haven't been seeing much of Javita publicly.
Well, Kevin, this raises a question. If this is going to be even more of a political fight, for people who are trying to factor in additional rounds of helicopter money into their economic and markets models, is this unrealistic that we'll see in the short term because this will turn into such a political fight, or are they going to still pass something in the near future, an additional round of stimulus?
They will pass something, but I think that the fight leading up to it is going to be even more partisan, just simply because all these lawmakers are back home and they're going to, they're going to duke it out. I would note just on that one particular point that you just mentioned as it relates to cash. This is an untold small and medium-sized business company, and in terms of the furloughs, the idea that Washington needed another week to pass that latest round of economic stimulus bill, that cost businesses, because there were several businesses, based upon my reporting and experience, that furloughed workers because they didn't think that the stimulus was coming. Yeah. And now those same people who were furloughed or laid off, the top of those companies are wondering, well, can we hire them back on and still qualify for the SBA? The SBA the SBA phone lines were inundated yesterday with calls, and so much so that there was a significant backlog. I'm curious to see, and I have not been able to find the answer to this, how SBA is managing a massive educational push for folks all over the country. I'm surprised that hasn't materialized significantly yesterday.
Kevin, I agree with you. I'm hearing the same thing. It's always great to catch up with you. Kevin Cirilli down in Washington.
Kevin,
a ton of confusion, Tom, around the sequencing of the fiscal package and some SMEs stuck in the middle of nowhere.
I know you guys do it better because it's a government, and I get the politics, John. I just don't think they understand what people need is money to pay rent. We have Muhammad Yunus coming up from Gallup, and he'll be brilliant on this.
And they needed it yesterday, not next week. It was quick for Washington. It wasn't quick enough. From New York City this morning.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 6.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mom's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX gains apply.
The moment you realize you've drilled through an electric cable. The moment you realize that doesn't just mean no telly on the wall, but no telly full stop. The moment you realize you've got British Gas Home Care. And not just your electrics, but your plumbing, heating and drains are all covered. So the moment you've got a problem, make it our problem. British Gas, here to solve. Search British Gas Home Care.
Sky Store brings movies from the big screen straight to your TV screen. See what's new tonight.
There's a Yeti on my roof.
Stay in for a cool adventure with Abominable.
You can do magic?
Watch the latest movie straight from the cinema.
I promised to take Everest home. Wow. And he's not home yet.
Abominable. Available now in Sky Store.
Slow down! This is amazing! Faster!
The moves may be choreographed, but the drama is real.
I dare you! I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we are live on Bloomberg Radio, 2 hours away from the opening bell in New York. Here is your price action this Tuesday morning. Equity futures down 6 points on the S&P 500, negative 0.25%. What a Q1 it's been. The S&P 500 down almost 19 percentage points over the last 3 months. In the bond market, the state of play as follows. Treasury yields coming in 4 basis points to 0.68%. In foreign exchange, a stronger dollar story against pretty much the whole of G10. A much stronger dollar. Euro dollar coming in 1 percentage point. Outside of that, a rally in the commodity market for crude after an ugly low from yesterday's session, south of 20, now $21.64 on WTI. On the Fed front, no scheduled Fed speak for today's session. And on the economic data front, we are light on the data front. The data picking up through the week, Tom. ISM's coming out tomorrow, together with the ADP report. Then we'll get claims, and then we'll get non-farm payrolls.
This came up last night over the dinner table. We were ordering out, supporting the restaurants in New York, John, and it came up. Afterthought turned to me and said, did we learn anything from the Fed interviews? Michael McKee's been on a tear. Bostic, Kaplan, Bullard. Have we learned anything in these interviews, or are they just sort of going along as they go along, trying to manage the message forward?
Managing the message forward and ready to do a whole lot more. And I have to say, some signs of success over the last week or so. Lisa, the primary market reopening for investment grade companies. We've had a ton of issuance.
Amazing.
The high yield market, finally, an issuer coming to market and supplying some bonds and investors jumping all over it.
Yum Brands coming out with a junk bond issuance, and everybody cheered. The junk bond market is open. Everything is solved. No, I mean, in all honesty, the rush of issuance has just been dramatic in the investment grade space. A record $109 billion last week. The monthly supply for March exceeding $200 billion, which surpasses the $177 billion peak back in May 2016. Just incredible rush.
Well, this is great, but to both of you, and particularly the agony that the real yield is on hiatus, look for that returning, folks, sometime this fall.
I hope it's not that long, seriously.
We're hoping. To the two of you, I think this is important. Why? What's the why here? Why is there such a demand?
Well, why is there demand or why is there supply? The supply is obvious because companies want liquidity.
No, but the demand story,
but the demand story is fascinating. First of all, you have the Federal Reserve saying that they're basically going to backstop the investment grade bond market because they're going to be buying it through this facility that will be managed by BlackRock, right? So on one hand, you have that. On the other hand, and this is fascinating, the Wall Street Journal publishing a story saying that stock investors were actually going over to the investment grade bond market and buying this debt because they found the yields attractive and because they don't want to touch stocks right now. Just to give you a sense of the diversified buyer base at this point, John.
Well, yields are twice what they were a couple of weeks ago, and the Fed's throwing the kitchen sink at it, and a lot of people saying, why not? I have no idea if it can continue at this rate because it's been coming so quick and so fast. And I think, Tom, if you address the technical issues, I don't think you've addressed the fundamentals at all. We're still on a shutdown. We've still got some messy defaults to come, and the earnings profile, the picture for the rest of the year, ugly.
You guys explain that so beautifully. I'm tearing up here. I miss you guys.
Oh, we miss you too.
I don't believe you.
I do. I'm going to take whatever I can get here, isolated in my little apartment.
That sounded so disingenuous.
I don't care. I'm socially distanced. I'll take it.
You can have it.
We miss Patrick Armstrong. Bring him in.
We do. I'm happy to say he's on the phone with us. Patrick Armstrong, Florimi Wealth CIO. Patrick, things have got a little bit better over the last couple of weeks. Are you encouraged?
I'm encouraged, and I think I'm sort of what you've just described in the last section, is we've been adding to risk in the portfolios, and we've been doing it through the corporate bond space. That's one area I feel a bit more comfortable with the Fed backstop, and we started buying it a bit too early. We were buying it mid-March, but with the Fed supporting investment-grade bonds, I was buying subordinated bank in UK debt, actually, yesterday. I was buying Barclays and Lloyds Bank, and I'm getting 4% yield on one-year paper from these companies right now in the UK.
Wow.
In the US, I've been selling put options on LQD, the investment-grade ETF. And implied vol on equities, everyone knows about the VIX every day where it's going to, but implied vol on LQD is 27% for May right now. So you can get a 5% premium just for selling a May at the money put. So you don't even, if LQD doesn't move, you can make 5% just betting it doesn't move lower. So implied vol is high in investment-grade bank subordinated debt. You're getting big yields versus zero interest rates on the safe treasuries and gilts in the UK and the US.
Well, one thing that I'm wondering, you're talking about delving into risk, and I'm struggling to understand where you draw the line. And when John was talking about the fundamentals, that's honestly what's on my mind. I'm looking at the BBB rated index where 10% of it is tied to energy companies, oil prices falling off a cliff. At what point does that matter when you start taking this risk and delving into what looks like yield, but could be nothing if there are defaults?
Yeah, definitely. And it's the junk bond in the energy market that I think is being priced for the disaster. The investment grade is still being priced for something pretty terrible. And with the LQD ETF I mentioned, you're getting about, it's 10% in the broad ETF as well, not just on the triple Bs in the energy companies. The AA stuff will be fine, I think. But with oil prices down near $20, bad news. That's the risk of doing it in the aggregate way with the ETF. But I really think it's the names that are already junk that are the ones at risk. The market's pricing those things well below 50. And I was looking at spreads, actually. I'm Canadian, and Hardisty heavy oil in Canada, the price on that, you're getting $5.50 a barrel right now because of the differentials. And that's oil that's going to be shut down right now. Those companies that are producing there, obviously, you're not profitable at $5 a barrel. I saw Oklahoma sours at about $6 a barrel right now. So spot oil prices are being decimated. But if you've got any sour oil or heavy oil, those prices are down near zero now.
Patrick, in the equity markets, and maybe people are in, and they were in like John Farrell buying at the bottom. I mean, I'm not in, I'm in the cash fund, but they're in and they've made a nice pop off the bottom. If you want to acquire equity here, are you buying the beleaguered or are you buying the things that have been front running out of this crater? Which one do you buy?
I'm still in the quality camp for equities we've been buying because the companies like Boeing and Carnival, they're relying on bailouts at this point. I don't see significant upside without being diluted massively on the equities there. Companies like Alphabet and Apple, they've got tons of cash. Their business model isn't going to be significantly impaired in the long term. They're not going to do anything dilutive. So I'd rather pay a bit of a premium, get into quality companies that don't have debt issues, don't have anything that's basically seen their business model destroyed. So I'd prefer quality growth at this point over the things that look incredibly cheap at 5 and 6 times earnings, because those earnings aren't going to be realized.
Patrick, forgive me thinking out loud, but these are the kind of things that I'm thinking about at the moment. Are we witnessing some kind of regime change where over the previous several years, in fact for much of the last decade, companies were using a balance sheet to feed the hopes and dreams of equity investors, loading up on buybacks and borrowing to do so? Have we seen a shift, and will that shift live with us long after this health crisis fades, where people are in balance sheet repair mode, we go into a balance sheet recession, and for those companies that drop from IG to junk, they try and repair things to get back up again? Is that the focus for credit right now, away from equity?
That's the reason. It is always in bear markets that you do get the regime change, and that's the million-dollar question. What's the new regime coming out of it? For me, there probably will be a value cycle at some point coming out of it. I think it's too early to call that right now. I think it's probably even too early to be going aggressively into broad indices. I prefer the quality. In terms of the junk names, I think that's not even where I'm thinking. I'm thinking it's the free money that used to go to companies that had no path to profitability. So the WeWorks of the world, companies like Uber, it was business models. They all had a path to an IPO. It wasn't a path to profitability. They wanted to get to the IPO, borrow money, get private equity investment, IPO, and that's where things would be monetized. I think that business model could be done forever because people realize there's risks with companies like that. When you don't ever have a path to profitability, you can't rely on free money the way you used to, because there are spreads now, and for good reason.
Yeah, the siren there's the Uber police coming to get John Farrow's 8,000 shares he bought.
That's me.
That's you, Lisa?
That's me. No, the sirens all day long.
We make jokes about the sirens, but it is extraordinary, folks, in New York City, particularly at night, to hear the many sirens. Patrick Armstrong, thank you so much with Plurimi. That was brilliant, particularly on equity, looking at fixed income for coupon. The Bloomberg NJIT STEM Report, always brought to you by New Jersey Institute of Technology, designated an Innovation and Economic Prosperity University for its support of business and community development. More at njit.edu. Here's Bob Boone.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. The lesson of the day is online, and here's a hint. It's brought to you by the letters M and S.
Wash hands now.
More on helping kids cope in a moment. First, the trouble with testing. Despite President Trump's continued claim that coronavirus testing is going just fine, state officials aren't so sure. Illinois Governor J.B. Pritzker is still waiting for supply to meet demand, complaining that less than half the 10,000 daily tests recommended by health experts are being carried out in his state. And the Los Angeles Times reports that while hospitals, doctors, and governments across the country were being encouraged by federal officials and the commercial lab Quest Diagnostics to send COVID-19 tests to a single Southern California lab for processing, the resulting bottleneck created a wait of 8 or more days on some tests. Changes have now been made for those tests to be sent to other labs across the country. The LA Times reports results can still vary between a day or two to up to a week. And parents stuck at home trying to help their shut-in kids cope with the coronavirus lockdowns can go online for resources from downloadable, printable, and colorable hand-washing instructions from the Muppets on the pbs.org website to videos and songs at sesameworkshop.org, including an updated version of the popular Brushy Brush tune. There are also tips there, like turning the proper way to sneeze into a game of catch a sneeze with your elbow, and links to hundreds of free Sesame Street ebooks. That's the Bloomberg NJIT STEM Report. Tom, Lisa, John.
Bob Moon, thank you, I think. Should we get you some news, some headlines worldwide? We'll do that from New York City with Michael Barr. Good morning to you, Michael.
Good morning, John, Lisa, Tom. Governors in many states are still finding it difficult to obtain medical supplies for their states, from masks to ventilators. Rhode Island Governor Gina Raimondo says for her, it's like the Hunger Games, trying to find the medical supplies her state needs, no matter where it comes from.
I'm not asking for a lot. I'm not asking for more than we need, but I'm out there literally every day and all night scouring the globe to try to find the necessary life-saving equipment that we need here in the state of Rhode Island.
Ohio Governor Mike DeWine says social distancing is helping his state tamp down numbers of potential infections, but he also says it's not yet time to relax restrictions.
We're into a crucial period of time, and my message to my fellow Ohioans is we can't let up now. We've got to really, really stay at this, or we're going to see this come at us even stronger.
The Florida preacher who was arrested for defying a local safer-at-home order by holding regular Sunday service at his Tampa megachurch is out of jail. The sheriff's office contacted Rodney Howard Brown to remind him of the county orders to limit gatherings to slow the spread of the coronavirus. But on Sunday, the members of the River at Tampa Bay Church were shoulder to shoulder. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Michael Barr there with the news, your headlines worldwide from New York City. Here's your price action in New York as we edge towards the opening bell in New York City. 1 hour and 47 minutes away. The situation as follows. Equity futures down 12 on the S&P 500, negative around about 0.5%. From New York this morning, good morning. We're live on Bloomberg Radio.
With the Bloomberg Business of Sports Report, I'm Michael Barr. The Tokyo Olympics will open next year in the same time slot scheduled for this year's games. Tokyo organizers say the opening ceremony will take place on July 23rd, 2021. That is almost exactly 1 year after the games were due to start this year. The IOC and Japanese organizers last week postponed the Olympics because of the coronavirus pandemic. The rescheduled closing ceremony will be on August 8th. The Tokyo Olympic organizers have asked the Games sponsors, which include General Electric and Procter & Gamble, to extend their assistance into 2021 amid the disruption. Last week, the head of the International Olympic Committee, Thomas Bach, said all the sponsors of the Tokyo 2020 Olympics will retain their sponsorship rights despite the postponement of the Games. Most affected from the delay are the 66 local Japanese sponsors. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The moves may be choreographed, but the drama is real.
I dare you! I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are now moving lower while European stocks are headed for a fifth increase in 6 sessions amid debate over whether the market meltdown has ended given the continued spread of the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are down almost 13 points. Dow futures down 82. NASDAQ futures down about 7. The DAX in Germany is little change. 10-year Treasury up 13.30 seconds, yield 0.68%. Yield on the 2-year 0.22%, and the 30-year yield 1.31%. NYMEX crude oil up 6.8%, up $1.37 at $21.46 a barrel. COMEX gold is down 1.9% or $30.90 at $16.12.30 an ounce. The euro 1.0945 against the dollar. British pound 1.2339. The yen 108.71, and the VIX is at 56.84. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. EM does not have the luxury that DM has at a time of crisis. DM, developed markets, can do something counter-cyclically on the fiscal side, a luxury that many people, many countries, Tom, in emerging markets do not have at a critical juncture.
It is true, and EM has been extraordinary. We have to say thank you to Damian Sassower of Bloomberg, who's really been just outstanding on these dynamics. With us now with a broader picture of the emerging markets is Carmen Reinhart. She is at Harvard Kennedy School, but far more than that, has been our most astute academic on the linkages of the developed world to emerging markets. Carmen, John, and Lisa really want to dive into emerging markets. I totally agree with them. But I've got to ask you, in your magisterial effort with Ken Rogoff, back to the Spanish Armada, I remember reading your chapter on This Time is Different in the Spanish Armada. What does your tome say about pandemics? What, in your study of 800 years with Ken, what did you learn about pandemics?
Tom, I recently wrote a piece for Project Syndicate, basically saying this time it's truly different because we haven't lacked pandemics, but in history, but the kind of policy reaction to try to save lives by basically shutting down economies this time is different. It's new. So the idea of using past pandemics to throw light on what's going on, I don't think it will work. The major one, the influenza of 1918, was during World War I. We had 9% real GDP growth in 1918 because of the war effort, not because, there were measures like what we're seeing taken today. So it's limited, very limited, what we can draw.
Professor Reinhart, Adam Tooze, a Columbia professor, wrote a piece for Foreign Policy that was pretty stark, and it said the coronavirus is the biggest emerging markets crisis ever, saying that the pandemic is starting to topple one of the pillars of the globalization era. His argument was that this time is different, as you say, in part because the developed market, the developed world, cannot assist the emerging markets right now, given what we're seeing. Do you agree with him that this is the biggest crisis ever facing that sector?
Well, it's certainly as big as the 1930s, which was very big. And it has the added dimension that it goes well beyond its origins are not in the economy, but its origins are in health. So yes, it's a stark situation.
Professor Jonathan here. We've talked many times, just to jump in if I can, forgive me.
Sure,
we've talked many times about dollar-denominated debt building up in emerging markets over the last 10 years or so. Are you starting to see those problems materialize now in the face of a stronger dollar, a shutdown in various economies, and a collapse for the backdrop going forward from here?
Look, the overused term perfect storm does apply, because don't forget that underlying, as if the coronavirus wasn't big enough, we also have the Saudi-Russia war. Many of these countries are commodity producers, oil producers and commodity producers. So they have, going to your question, a massive shortage of dollars because their exports, the export values are way down, export volumes are down, and they do have dollar debt. So the expectation that debt servicing and debt and defaults and restructurings are going to be on the rise is something to, be expected.
We thought many people, not including myself, but many people would come on this program, Professor, and question dollar primacy, dollar hegemony in the next economic downturn. Are we finding out that the dollar is the place to be once again, even in this downturn?
Well, funny you should mention that. Ethan Ilsetsky, a former student, Ken Rogoff, and I have had several recent pieces on this very issue. And indeed, what we find is that in the 10 years after the 2008-2009 financial meltdown, the dollar gained a lot of ground internationally as the reserve currency for two reasons. One is the euro fell back. Concerns about its sustainability, it fell back. And the second is Chinese lending, which has been massive all over the world, is dollar denominated. So it's Chinese, but it's not in renminbi for the most part. It's in dollars. So the dollar, yes, it's the dominant currency, and no evidence to the contrary at this stage.
So, Professor, but dialing this forward from a market's perspective, dollar-denominated emerging markets debt just had its worst quarter since 1998. Are we going to see more of the same and a rash of defaults that rivals what we saw during the 1980s in Latin America?
It's very possible. It's very possible. Now, I have been hoping that the international community, the multilaterals with the major governments, move towards a debt standstill, a moratorium before the defaults materialize. Because after all, everybody's incomes, this has at the household, at the firm level, at the country level, has been paralyzed. So debt payments should also likewise be temporarily suspended, but absent that, it's already happening. You're seeing the downgrades in the credit rating agencies, with countries moving into junk and near junk status.
Carmen, always great to get your thoughts on this program. We appreciate your time this morning. Our thoughts with you and yours. Carmen Reinhardt there, Harvard Kennedy School professor. Emerging markets on the quarter, absolutely vicious. The Brazilian currency down more than 22%. The South African rand down around about the same amount.
John, this has been underreported in all the other distractions that we have and our selfishness of looking at our own American geographies. But the flow of money out of EM is jaw-dropping.
And
it's
into the US dollar. We'll talk about that a little bit more a little bit later on the program. Equity futures in New York this morning, 95 minutes away from the opening bell. They are negative 11 points. We are down 0.4% from New York this morning. Good morning. This is Bloomberg.
First thing you think of when you hear cancer, that's it. It's finished.
All of a sudden your life becomes about appointments and this test and that test. But then you start to just thank God that those tests are there.
Every single day, nearly 1,000 people find out that they've got cancer.
These donations are absolutely crucial for all of the research to help families like us.
Donate right now to Cancer Research UK.
For just £2 a month, you can make a real difference.
Thank you for your donations.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen. Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover. Rowan wins.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But I'm
For these and more, search sports and scroll down to the world of wrestling.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Money Minute. Walmart is taking additional steps to protect people during the coronavirus pandemic. The retailer will be taking the temperatures of its employees as they report to work and is in the process of sending infrared thermometers to all of its locations in the next 1 to 2 weeks. Walmart is also making masks and gloves available to healthy employees who wish to wear them, but says the masks will not be of the N95 kind, which should be reserved for at-risk healthcare workers. Honeywell is ramping up its manufacturing capabilities in Phoenix to produce N95 face masks. The company says the Phoenix expansion, coupled with previously announced new production in Rhode Island, will allow Honeywell to produce more than 20 million N95 disposable masks monthly. Carnival expects a net loss for fiscal 2020 as the coronavirus decimates the cruise business. The company is suspending dividends and buybacks. Meanwhile, Royal Caribbean extended its modified cancellation policy through September 1st. Gina Cervetti, Bloomberg Radio.
If you promise to cover the latest financial and business news from Asia,
we're talking about social enterprises in Asian countries
with expert analysts who really understand Asia,
aren't you encouraged with respect to U.S.-China trade?
Then you must be us.
Tell us about the trend within this part of the world.
Bloomberg Daybreak Asia.
What sort of fiscal stimulus do you think we'll see?
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is is Bloomberg Surveillance, Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone in Washington and Boston, Bloomberg 1130 in New York, all of you across this nation on Sirius XM Channel 119. We welcome you on all of the digital avenues we have into your home in an isolated and locked down America. Lisa Abramowitz, John Farrow, and Tom Keene. We hope good conversation to get you through this Tuesday and through the week as well. It is extraordinary in New York City. It is a gray cloud, heavy cloud, gloomy day, and with it are these statistics. John, I just looked at John Byrne Murdoch's beautiful work at the FT on New York and on this nation, and I'll be direct. The curve is not bent.
Not yet, but let's hope we get there. I'm optimistic, Tom. A lot of people started to do the right thing in places like New York City, California, and elsewhere as well. There's a big effort now to really flatten that curve.
We heard earlier Governor DeWine of Ohio, and, you know, those are the kind of people that are just saying, along with Governor Cuomo, let's get this done. Lisa, I look at it almost as an interregnum here to Wednesday ADP, Thursday claims, which will be, I think, still the data item of the week, and then the jobs report on Friday.
Yeah, the jobs is really going to be front and center. How bad is it going to be after that record 3.3 million number that we got, the jobless filings? If that number continues to escalate, can we draw, and John, this actually goes to a point you've been making, can we draw the conclusion that the checks in the mail already were way too late and the carnage, particularly in the retail sector where we're seeing tons of furloughs, just done? Period.
Well, I think you can make that argument already. I think you can say that it was late already. Now, Is it good that we finally got it? Sure, but the sequencing was always a little bit of a mess. In an ideal world, Tom, what we would have had was this plan ready to go before you started to see shutdowns and the huge mitigation effort in places like New York and California. But what happened is it came just a little bit too late, and many small and medium-sized enterprises already made the decision to lay people off before the funding, before the aid actually became available.
Well, let's link that into what we see across this New York and across this nation. I do want to say, folks, on the data, we'll get to that in complete detail. Karen Moscow with our data checks. Oil, a little bit a rebound, but ugly in dollars, some dollar strength today. We'll get to that in a moment. Oliver Chen is in the securities analyst business, one of those wonderful people that not only writes the reports, but actually goes in the stores. He can't go in the stores now. They're all closed. He is with Cowen and joins us today. Oliver, there's an American Eagle 2 blocks down from our world headquarters. It's closed. How critical is it they open as soon as possible?
It's really critical just because the majority of sales still happen in store. So for all these retailers, they're in survival mode because their number one source of revenue is at risk and for the foreseeable future. There's so much uncertainty. I mean, the employees furloughed across Macy's, Gap, and Kohl's. It's uncertain when stores will open. As we poll executives, it could be 4 or more months, and our analysis indicates that liquidity is at risk after 5. So 1 in 4 Americans work in retail, and retail really plays an important part in the consumer. So that this is something we're watching, and we continue to see a bifurcation where people who need household essentials and food and beverages, that's really obviously working. Discretionary purchases are less important, and at-home fitness is working too.
Oliver, there's a huge amount of confusion at the moment over whether SMEs who decided to furlough employees before the aid became available from Washington, D.C., whether they're eligible for any of those loans, any of those grants from the fiscal aid package that went through over last week. Are they? Have you got any clarity on that whatsoever?
Yeah, I think as I talk to CEOs and my contacts in the business, everybody's analyzing it closely and logging on and looking with no specific conclusion. So I think it's a point of transition where people are really seeking out what what's available. Also, when you furlough a worker, there's different standards by state regarding unemployment. So I don't think there's a blanket answer regarding allocating these resources to where they're needed most, to be frank. And we're just seeing all kinds of different efforts to support workers and places of business in the time of need.
More than 500,000. That is the number of furloughed or laid off retail employees in the United States. Big retailers across the board closing down. And I'm looking right now at some of the names. Victoria's Secret. I'm looking at Gap, Neiman Marcus. I'm struggling to understand how much this entire episode is going to force companies that were already struggling to the brink. I mean, how much is just accelerating a process that would have been underway already with some of these struggling retailers versus actually killing really viable and strong and frankly thriving businesses.
Yeah, I agree with you. Regarding what's happening next, it's the big getting bigger. So we're moving towards a world of Walmart, Target, Amazon, and then mega players like LVMH. So consolidation is one key theme with related M&A of some good brands that aren't necessarily as profitable or at good valuations. Two, I think we'll see store closures and permanent changes in malls. We already had struggling malls. About 25 to 30% or more of malls are B and C class, and that's a big issue. And then rethinking rent. The rent expenses will need to come down, and this will a lot depend on the pace of recovery. So going forward, we believe stores will be closed until May at least, if not longer. And the pace of the consumer coming back will be a big question mark. Is it V, U, or L? And that will matter for long-term viability. But department stores were already struggling. The big theme I also want to mention is curbside pickup and rethinking retail in terms of contactless and what does experiential mean in a contactless world. Yeah. So we've already been seeing the digital innovation with zero checkout and curbside pickup. That's accelerating by a couple of years now.
Oliver, I want to pick up on the consolidation theme that you talked about. Gap, for example, offered information to employees about getting jobs at Walmart. I'm wondering, what kind of consolidation? What are some names that you see? Is Walmart going to go buy Gap?
Anything can happen. I think what we're seeing is, Walmart is the biggest grocer, and it also sells lots of soft goods and essentials. 55% of the business is grocery, and Amazon grocery and apparel, and rethinking. And Amazon's even interested in luxury goods. So retail has really been fueled by scale because even before this, the digital investments, the supply chain investments, the need for speed has really been the domain and easier for larger players. The artificial intelligence data, rethinking data, scale matters for the training models and the algorithms. So that's something to think of, and anything can happen. I think every retailer is working together, and this is also a time for the industry to come together to reallocate resources where they're needed. And clearly, there's so many stockouts.